Good morning, everyone, and welcome to Nadex Morning Analysis, where we look at some potential hotspots in the markets for today. It is August 26th, Thursday, August 26th. Oh, you know something? I've got an echo in this room. We certainly don't want to have that. All right. My name is Todd Rich. I'm with Nadex. Brian Caprice from Keep Trading Simple joining me. And before we jump into it, I do need to quickly share this disclaimer that trading involves risk and may not be appropriate for everyone, that any trading decisions you make are solely your responsibility and at your own risk. And this is an educational session. Please do not construe anything Brian or I say as a buy or sell recommendation. We are doing this for your education purposes. Now, I am going to quickly drop this up here. We had some economic numbers come out this morning and a big yawn. If you take a peek, we could see that second quarter GDP came in 0.1% lower than the forecast. In fact, that's right here. And
Which was the
I would,
original forecast. They adjusted it a bit high. They changed it Monday night, Tuesday. They changed that forecast higher.
so there we have it. It's a rounding error. I'm not too concerned about that. In fact, neither are the markets. Initial jobless claims for the week came in 3,000 higher than the forecast. That also is a rounding error. So the equity markets right now, a big snooze. In fact, pretty much across the board. I think everything's in a pause, holding pattern. The Jackson Hole Symposium kicks off later today. It officially kicks off, I believe, this evening. Tomorrow, we're going to be getting some news out of that symposium. We will actually be getting some today, but it's going to be ad hoc. It's going to be people who are part of the central bank system making comments to the media. And as those comments come out, markets may or may not react to what somebody says. We're already getting a couple of comments that tapering would be appropriate, that tapering sooner rather than later would be expected. But again, no real timelines. I think everyone's kind of coaching that up, and I think there's some pressure to do that. But at the same token, we're still watching the spread of Delta. They got to be logical and rational about, how
What's
hot
Delta,
will they
Todd?
let the
Todd, what's
economy
Delta?
get? Yeah, I
What's
think
Delta? I
we
don't know
all
about
see
that.
inflation stepping into the picture still, but it's there's a lot of moving pieces here, and it really is. It's going to be you're probably going to get some conflicting information from just ad hoc media reports, but we have to have our ears open and be prepared for any potential volatility. And I would expect to see some more likely tomorrow than today, but and it's the last week of August. I mean, Labor Day is coming up, and before we know it, blink, it's fall, and the markets will start heating up again. So, Brian, I'm going to flip it over to you because there really isn't
Mhm.
a lot to talk about because nothing's really moving. We talk about hotspots. We don't have one
Mhm.
at the moment.
Yeah, although I think one is brewing today, as you mentioned with Jackson Hole. Um, I mentioned this, I think Monday, when we saw the actual, I guess maybe it was Tuesday, when we saw the revision actually go higher. I said the problem with this is, yeah, being optimistic is great, but the market prepares for that. If they go too optimistic and then miss it, again, had they stayed at the 6.6 on Monday and it came in at 6.6, it would have not been a big deal. But the market was expecting 6.7. They adjusted higher for it. So it is 0.1, but it kind of sets us off on a negative tone. The 353, again, it's another negative. It's kind of like small negative, small negative. The price index going higher, although it's not a different color. Again, it is a little bit higher. So it's kind of three things in a row, not great. And now we can see news headlines coming through. James, and again, if you say, Ballard, Billard, there's many ways that like I said, I don't know the proper saying of it.
Yeah.
All I know is between him and George this morning, there are some headlines coming out. The Fed's Esther George says it's time to start easing off the, quote, policy juice. So again, technical term there, the policy juice. Bullard is saying we're getting more inflation than expected. That's a big one coming out of the Fed. And again, Bullard's always been very, he's like, let's move. Like I think he's going for Powell's job right now. Powell's playing the political game. Bullard is playing the economics game. And then another quote coming through just a minute ago, it says, housing prices are a concern. Fed should not be complacent about it. So again, easing off the policies used, getting more. And again, some of the other headlines coming out of this, the Fed should get going on taper and finish in Q1 2022. That's a kind of an abbreviated timeline there.
Yeah.
Finishing by first quarter. Skeptical inflation will moderate in 2022, perhaps higher than 2.5%. It's not transient. I swear we've been talking about that. Again, this is Powell playing games
Your
with
sarcasm
politics.
around transient cracks me up.
Right. But what I'm saying is I feel that at this point, I used to be a big Powell fan. I am not anymore. I feel like he's playing too much of the political game, trying to stay in, playing politics. And I hate when politics and, economics come together.
Right.
Now you have somebody saying that I don't think it's going to turn around. That's the first big chink in this, the armor of saying it's trans. And again, everybody is using this transient term. And now you have one of kind of the, not rebels, but one of kind of the, one of the other major voices in a voting member saying that I don't know that it's going to moderate in 2022. It could perhaps even be higher. And then he repeats that he wants to complete the taper. And again, repeats he wants to complete the taper by Q1 2022. All we're hearing is that we're going to start raising interest rates in 2023, and we'll wait to see how it goes. This guy's like, hey, 6 months from now, we are done the taper.
Yeah, that's also a little, maybe a lot extreme. I mean, the Fed doesn't.
Well, but again, he's a voting member.
You don't do something overnight, and not that was overnight, but that's
the taper was an overnight decision
in a short period of time without giving due course to measure as they're tapering. They're going to measure. And watch. Okay, we've tapered. What's happening? This guy's like, rip the Band-Aid off and let's let all hell.
Well, he's been ripped the Band-Aid for a while, and he's not the only one. There's like three or four voting members now.
You don't really do it that way because then you can go, whoops, we shouldn't have done that. You can. There's a more measured approach.
I mean, that's interest rates are the same thing. That's why they fluctuate back and forth. And again, it's one of those things that the Fed is always kind of slow to react on the back end. And again, you said they can't flip a switch. They did. All the taper went in with a flick of a switch. And, the government is like, hey, listen, infrastructure, bam, flick the switch. So flicking the switch does actually happen. You don't want to go too far. But remember, everything we're seeing out of the economy looks great. People are going forward. Unemployment rates are coming down. GDPs are back up in the 6.7%. So the problem is if we let it run too high.
It's time to start.
we haven't. I mean, there was kind of a recession, but it was a global pandemic that caused it. It wasn't the natural cycle of the market where it kind of pulls back and everything resets a bit. We haven't really had a natural reset. Those are healthy for the market. It's the same thing with a forest fire, right? Forest fires are actually beneficial. It gets rid of all the dead, the old, and clears everything out. So new growth can actually happen. The market's the same way. You have a boom cycle and then not necessarily a bust cycle, but you have that pulling back where it gets rid of all the bad things that accumulated and then it drives forward. That's natural. We haven't really had one of those, because the economy has been running hot for so long. The pandemic is the only reason we had that fallback. And now we're not actually out of the pandemic. We have Delta, which everybody talks about. And, we're constantly hearing about how it's moving around, but markets at all-time highs. I mean, looking at the markets.
We're just pulling back a little bit. So let's jump into some of these charts.
Yeah. So, I mean, ES, I said it yesterday. I was kind of angry last night. I was like, I missed it by 2 points. I'm like 4,500. I thought that yesterday was the day. I thought we were going to get there. We got within, actually, I think it was 1.7 points. I think I missed it by. It's super close, but we really haven't left the range of just edging higher. My original assessment this week is I thought Monday, Tuesday were really the important days we needed to hit it. We hadn't moved through, and I thought, okay, Wednesday, again, we got the infrastructure. We had J&J get great data. Pfizer got approved. I'm like, okay, all the factors are there. For Jackson Hole at this point, I don't know that we're going to get the same boom cycle. Now we could, right? There could be, I mean, I don't know. They could come up with world peace in the next 2 days. They could, right? I feel that with the data that we've seen this morning, kind of the uncertainty about Jackson Hole and people not wanting to do things, I think today is already setting up to be more of a red-based day. We kind of made our attempt higher, seeing kind of this data saying, oh, you know what? Maybe it wasn't as good as we thought it was, right? And starting to see this tick up a little bit and seeing inflation continuing to go. Remember, anything that's inflation-based, even if it is little, feeds into the interest rate hike. Again, gold's been kind of moving. Oil's been moving all over the place. We know there's a lot of inflation over there. Seeing two different Fed presidents, and I don't know if George is a voting member or not, but I know Bullard is definitely a voting member. I would say that it's setting up kind of more for a negative than anything else. And, if we make it through the next 35 minutes, and people are seeing all all four indices in the red, which right now it looks like three out of the
Actually,
four are.
yeah, we got the Nasdaq actually
The Dow
taking
is the only one holding that I
yeah,
see.
the
But
Dow's
again,
holding. Isn't that
yeah, just a
interesting?
little bit by 0.07. So it's close, but everything else is kind of heading down. If it starts off with that negative sentiment today, there may not be a lot of factors that really try to drive this forward. And again, like I said, unless there's world peace magically at Jackson Hole, which that's not really what it's about, they're going to talk about unequal economies. Well, who's in the most advantageous economy right now? Us. So if we're talking about the inequality in the global economy, it's probably more based against us, not for us. So yeah, I would say that it's kind of setting up. And again, really the ES right now in this chart, we're not seeing a whole lot. That
I mean,
4,500 is just
I'm looking at I got the Nasdaq up.
yeah. Nasdaq is actually the biggest down.
It's the same chart.
Yeah, it's a little bit on the lower side. Like I said, it's down according to mine, 0.24% right now. And again, we were looking for it to get up to that 15,400. It didn't get there. It is pushing through. And again, we've talked about number of hits on a different level. And, again, you got one there, you got two there. And guess what? We just hit our third right here. And we're starting to drive towards it again. And we know right below that, we have more or less a racetrack from there down. Yeah. In this kind of orange area. When this continues across, you can see that slices right through the 15,200, and it goes all the way down to the last time that we saw some decent buying down here, and it's a level on top of a level. That's sitting right there at 15,125. So that would be a heck of a day. That would be a big drop to the downside today. About 190 points. That's not going to be one of those things that people are happy, but that's what happens when we have these big explosive candles and three touches. So that's kind of a big thing. And then again, YM now it's at 0.09, but remember, it wasn't at all-time highs. It was battling a lot of these areas, and these are small areas that we marked off. It's a little bit up, but if everybody else is negative today, again, the last time we have any tested levels are going to be down here at approximately the 35,227. So not great. And then Russell is kind of fighting. I wouldn't say it's doing as much. We had some levels up top. You can see it based and kind of grab that higher level up top. So let's adjust this. We'll move it forward. You can see that, again, that's the level. And this is the higher time frame zone, which you don't see too often. But, yeah, I mean, it's an area, if this one actually did hit the 2250, which is a level we talked about earlier in the week, being that kind of half number. But, again, 2248 looks like we have some people coming in there. I would say the other
really, thing it's I mean, with all these equities, it's just they're sort of treading lightly. A little bit of pullback right now. We could see some risk off. Depending upon how some of these comments come out of the Fed. I mean, they're ad hoc comments to the press. So this is one of those days where
they're consistent, though. I think that's the thing that you got to take into consideration, that they are consistent, and eventually the Fed has to raise. So it's kind of like if everybody's pushing and there's one guy going, no, it's transient, it's transient, it's transient. Once this guy doesn't believe it's transient, the wave drops very, very fast.
Yeah.
So if Powell gets the approval that, yep, you're in, and then all of a sudden says, okay, we're seeing more inflation. Because again, Bullard's seeing this somewhere. He is seeing it in some type of data. He can't just make these things.
We all are seeing it. Particularly in energy. Right.
Yeah. Well, the price index today was not. It removed food and energy. But
yeah, and then we also know things like autos, and we know that there's supply chain challenges. They can't get parts, particularly microchips, to build the cars. In which case, you've got
try upgrading a PC
build,
right now.
You got no supply. Prices are going to go up.
Yeah, try upgrading a PC right now. Trying to get the pieces for that, it's impossible. It's very, very difficult to be able to get video cards, GPUs, because again, the crypto aspect, but then the shortage of being able to get chips in and the high quality chips. And everything. It's just a supply chain.
Everything. So.
Yep. All right, I want to cover oil real fast before we get out of here. We have 1 minute to go. And again, oil was yesterday, but I want to talk about the move. Dropping it up in the 30-minute, we talked about that we had levels sitting there. And we talked about we had a big push up. And then again, that 9:30 open, we were sitting at that 68.04. And you can see it had an immediate pushback to the downside. Now, again, that was just standard technical analysis. I want to dive in because, again, today is the natural gas inventory report. This was that top piece. And again, you should have grabbed that from yesterday morning. And again, we talked about the up-down effect. Whoops, not that one there. We talked about the up-down effect in the 2 sessions. And again, this went up, down, and ended up coming back and closing back at the same area again. But I want to talk about what's going on right down here. So although it was not an ideal setup yesterday, I told my students, yeah, it's coming down. It's most likely going to be long. It's coming back into an area. Remember, this is that news strategy that I keep telling you guys. You got to be looking for it. You can trade it for oil. You can also trade it for natural gas. It came down. It found an area of stabilization, not the best area, and it ended up pushing through a little bit, but that was okay. What we were looking for yesterday was an initial push higher of this one. And again, it went much, much higher. But looking at those shorter duration contracts, as it came down and it gave us a little bit of stabilization, I'm not going to go down to the 1 minute because I think it'll confuse people. We came down, we stabilized at a level right before news. And even though it clicked through, that doesn't really bug me because, again, we're talking about a short duration binary contract. Do I have to worry about a stop loss or a price pushing through a level? No. Right? That's the benefit of the binary options. Well, this one had an immediate jump of about, 40 cents, I guess, I'm on 5-minute chart. So, I mean, within 20 minutes, it moved about 50 cents higher. So it was quite a large move. And again, even on the daily, but you can see you got that initial surge right off of this. Reason I'm telling you is not to talk about what happened in the past, but because natural gas has their oil inventory report today. And I'll bring this back up to, we'll do a 15-minute. You can see that there has been some volatility in this position. You know, starting yesterday at 8:30, very fast up, grabbed the level, came all the way back down again. We're kind of approaching a level at 397.7. We have natural gas oil inventory reports in an hour and a half. So you trade this the same exact way. Look for both these levels. We know those are 30-minute levels. We can drop it down to a 5-minute. And again, it's too early now, but kind of see what happens once the U.S. market opens. Again, it may hit this level and take off before news even comes in. Maybe it will, maybe it won't. We don't know. It's an if this, then that type setup. But start watching for it. And again, some of these overnight levels are all right, but we really need kind of the regular trading session. Again, you know, you can go down here, look for natural gas. You know, you can see that it doesn't really, you know, there was one last time, but you can see it doesn't necessarily hit right on often. So it provides the same opportunity. So just to go through those rules again, 10, 15, drop it down to a 5-minute chart, look for stabilization, look to your left for areas where there's bursts or any type of large candles, particularly if it's in this 397 and 384. Look at the short duration binary contracts, look at the call spreads to see if there is a short duration floor or ceiling, in this case, probably more ceiling. And then also, again, potentially look over at the knockouts. And that's just standard for all news. Look at all those three things. See what the premium looks like in the binaries. If not, if it's high or you seem like it's quite large, that's where call spreads and knockouts seem to work. But the setup has worked absolutely fine. Again, it works for all news releases, but particularly for these inventory reports that happen every week. And this one has been a mover almost every single day. I mean, you can see that the volatility in this one kind of flipping back and forth. I mean, this is not one of those boring where it just does this like forever, right?
Right.
This has been a whipsaw. And again, traders love volatility. This one's all about volatility. So check it out today for a possible release on a day where we have, again, a lot of waiting and seeing what Jackson Hole's going to say.
Perfect. With that, any questions for Nadex, please email us customerservice@nadex.com. Any questions for Brian? You can hit him up at support@keeptradingsimple.com. And again, a bit of a pause of a day. Everyone's waiting to hear whatever little tidbits of news come out as everyone congregates, or they're not even congregating. It's all virtual. So it's kind of interesting. There'll be just some random news announcements as the press tracks down different members of the central bank world and gets their opinions. And then I think we'll have a little bit more. We'll hopefully have some real tangible news to bite our teeth into tomorrow. And in the meantime, keep an eye on that nat gas report. With that, Brian and I will catch you again tomorrow morning. It will be Friday, and hopefully we'll have a little bit more than what we've had today. And want to wish everyone good luck in the markets.